Chapter 5, we talk about bank services. So I skip over section 1. You're welcome to read through it though, especially if you're younger and you've never really ever maintained like a check register. So that's what it's getting at, is if you write checks or you have banking transactions, that you record them all in like this little journal bank register so that you know what your balance is at any time. I feel like with nowadays everything being online, people are not actually doing that step anymore. You're just logging in and looking at your transactions. But you just want to make sure those transactions are what you actually have authorized and recorded. I guess that's ultimately the goal. Now, section 2 deals with businesses that accept credit cards, which is basically everybody anymore. I mean, it's very rare to go into a business and have them be like cash or check only. So what happens when businesses add credit cards to their payment options is they're going to contract with some sort of a bank to be able to allow those credit cards, and that bank is going to charge them a fee. So it's basically taken off the top. So like we're going to add all their sales, subtract any returns that came back, and then that net amount is what they're going to pay a fee on. It could be 2%, could be 3%. Again, we'll read the problem to find out. So I lead into that's why these credit card companies offer back rewards, because the more they get you to use your card, even if you pay off the balance at the end of the month, they're still getting that fee from all of those stores. So maybe they're going to get 2% or 3% from every store that's taken that credit card. So sure, they'll give you 1% back because they're still making money. And then maybe you won't pay your balance in full, and then there'll be interest too. So it's a way to make money, but again, I like getting my points back. So it is just kind of a little perk that we get from doing that. So then this is the steps that we're going to use to calculate what amount the store is going to get from the bank. So we're going to add up all of the credit sales, and then we're going to add up all of the sale returns. So those are ones that, again, you use your credit card to make a purchase. You go back to the store and say, hey, I'm returning this, please credit my account. So again, those are going to be subtracted from the sales. So that gives us what's called the gross deposit. So those credit sales less those credit sale returns is our gross deposit, and that is the amount that the store will pay the fee on. So then we'll take that amount and multiply it by whatever percentage bank fee they give us, 2%, 3%, whatever it is. And then again, remember, we always subtract the bank fee. Do not add it. The bank never gives us money, ever. So they always are taking money. There's always fees. So that's a common mistake that students will make, is they add that bank fee. Well, again, the banks don't give us money, they take money. So subtract it, and that gives us our net deposit. Then we get into section 3, where we're going to reconcile our bank statement. Again, this may be something that you as a person do not do. You probably, again, log into your account, look at it, at least probably weekly, if not every few days, and make sure the balance looks legit. Businesses will still go through this process here to actually reconcile the bank statement, and their auditors make them do that as well, just so they know for certain that every check that was written, every deposit that was made, all was actually, cleared the bank. So we do it kind of in 2 steps. We take the bank statement and we look at what is the closing balance at the end of the month. So that's our balance per the bank statement. Then what we're going to take from that balance per the bank statement is any checks that are still outstanding, which means we have written them and we've mailed them or given them out, but they haven't cleared the bank yet. So again, that if you're working actually in a business, that might take a little bit of time to kind of to go through and see which ones have not cleared. Again, with individuals, it's probably not that hard to look through and say, oh, I don't see this check. But again, businesses would have a lot more checks. Then what if there's any deposits where you have recorded a deposit? So you're a business, you've recorded it into your ledger, but the bank hasn't recorded it. And you might think, well, how does that happen? A lot of businesses will use that overnight depository box. If you've ever, looked at a bank, they normally have one either by their door or by their drive-through. And then you just open this little, drawer, you stick all your checks in there, and then you close it up, or your cash or whatever, but then it's in the bank. So they'll come in the next day and process those during the day. So there's always a day lag in those deposits in transit. Or what if you had mailed it in to be deposited, but probably that overnight depository box is more common. That will give you your adjusted bank balance. Then you go to your register, or again, if you're a business, what is in your ledger, what's in your computer system as your cash balance. And then you will look at the bank statement to say, okay, well, is there anything on the bank statement that I haven't recorded? So a lot of times bank service charges, you don't know what those are until you get your bank statement. Any interest that you've earned, maybe you don't know what that is until you get your bank statement. So then those will be adjustments to your books balance. And then once you subtract out those service charges and add back that interest, the two should equal. So that's always your double check at the end. Does my adjusted bank balance equal my adjusted book balance? Assuming they equal, I'm fully reconciled. Okay, so that is it for our bank services.